First up, your New Year resolution for markets, for your, investors as well.
Well, Hiral, great to be here and wish you and all the viewers a very happy New Year in advance. And let 2026 be much better than 2025. I think that's the resolution for all the investors.
Absolutely. Everyone's watching out for a great 2025. But with, India significantly underperforming the broader emerging market indices in 2025, Hiren, we've seen the widest margin since 93. For 2026, are you seeing a reversal of this trend, or will the global capital continue to favor the non-India emerging market regions due to the current valuation differentials?
Well, Hiral, let's put things in the context here. I mean, India had two very strong years of outperformance in 23 and 24. And back then, the other markets, especially the bigger emerging markets of Asia, like China and Korea, were not performing very well. India earnings growth was very strong coming out of COVID, and generally there was a lot of buoyancy. Economic growth was strong. In contrast, in China, there were some policy-related issues. The private sector was not being favored by the government. National security was the priority. All of those things started to change, I would say, sometime in the fourth quarter of 2024. And two things happened. AI-related semiconductor value chain, which is very predominant in Korea and Taiwan, started to perform very well as globally investors realized that the entire AI value chain is located in Asia, especially in Korea and Taiwan. Some of the themes like value up theme in Korea, driven by the corporate governance reforms, also started to catch the attention of the investors. And in China, the economy became the priority, and the cumulative efforts of reviving or stabilizing the real estate sector in China, and improving the consumption driven by several subsidy programs and all that started to work. So combination of all of these reasons have led to, I would say, the non-India emerging markets doing very well this year, and some of the valuation gap has been bridged. Now, so that's where we are today. Calling 12-month market is always very difficult, but one can definitely say that the relative valuations of India are more reasonable today than where they were 12 months ago. And the argument that India was relatively much more expensive compared to the rest of the region is no longer valid today.
Okay, so that's with regards to how you're looking at the India market as well. But your emerging market ex-China strategy, given WhiteOak's unique focus on emerging markets ex-China strategies as well, which specific regions, according to you, say, for example, Brazil, Mexico, Southeast Asia, offer the best complementary exposure to an Indian-heavy portfolio in 2026?
So, Hiral, at WhiteOak, I think we have several variants of emerging market strategy. We have the global emerging market strategy, which invests across emerging markets and attempts to outperform the MSCI EM benchmark. We have EM ex-China, as you mentioned, that has been a relatively recent strategy, but also we have a very unique emerging market ex-India strategy. And this is something which plays to the strength of the WhiteOak, which has a great investment team investing across the emerging markets, and also the distribution capabilities in India. So this is, if you're an investor which has predominant exposure in India, EM ex-India strategy is very unique in that sense, which provides you the exposure outside of India to the other emerging markets.
Okay, and with 2025 serving as a constructive breather for markets to digest, say, high valuations from here on, do you believe that the projected rebound that could come in corporate profitability will be enough to drive a double-digit return in 2026?
See, I think we are talking about India, right?
Yeah.
Here, specifically, yeah. So on India, I mean, we are always positive from a longer-term attractiveness of India perspective, because young demographics, consumption-driven growth, domestic driven growth. I mean, all those structural factors, higher profitability of corporate sector compared to the rest of the region, all those factors are very structural in nature, and those factors will continue to make India relatively an attractive market to look at from a longer term perspective for all the global investors as well. And we generally don't like to make or we don't have very strong views on the next 12-month returns, because the next 12 months are much more driven by the PE multiple or re-rating or de-rating, which sometimes can be more driven by the sentiments in the near term as well. But as you go longer term, the corporate earnings growth becomes the primary driver of the markets. And if you look at over the last 25, 30 years, corporate earnings in India have kept pace with the nominal GDP and broadly have grown at double digit. So there is no reason to believe that over the next several years, that kind of corporate profit growth is not possible. And if the corporate profits continue to grow at low double digit, then the market returns should also follow in the base case that kind of corporate profit in the longer term.
Okay, so to look at that aspect, what are the sector opportunities you're seeing, Hiren? Because in the past you have covered financials, telecom, consumer discretionary as well. Which of these do you believe are the best positioned to lead in the market recovery running up to 2026, especially the private investments, actually beginning to show signs of life?
Yeah, so it's very interesting, Hiral. Like in India, we generally find opportunities across multiple sectors. Middle small caps are an area which we are always interested in, because we think they are less efficient segments of the market, and we tend to find more alpha generating opportunities in the middle small cap segments in India. On the other end, from a sector perspective, consumption, technology, healthcare, industrials, those are some of the sectors which we generally tend to find more opportunities in a market like India. Having said that, if you look at outside of India, in the broader emerging markets, there are several themes which have worked very well, and some of them will continue to drive returns even going beyond 25 as well. Let me just highlight two or three of them. The first is the artificial intelligence, or AI. And as I said earlier, the AI supply chain, and that's a very unique exposure. If you are an Indian investor, you can't get that in India. You have to look for those opportunities outside of India. So AI supply chain is one area which is kind of very unique compared to India, which you don't get here in India, but you can get that exposure outside of India. And in some of the markets like Korea, the corporate governance reforms is a very big theme today. Value up strategy, as it is called in Korea, which incentivizes the corporates to kind of pay up higher dividends, do more share buybacks, do less related party transactions. All those things are improving the corporate governance practices in markets like Korea, and that is also kind of helping. Other than that, the outside of India markets also tend to have higher commodity exposure. So the gold mining, copper mining, those kind of exposures also you tend to get relatively more in markets outside of India. So I think from a diversification perspective, it makes a lot of sense to look at these markets if you have large amount of exposure in India.